You're listening to Friends and Family Capital's First Principles Finance. Our goal is simple: keep you building. Each episode, we discuss tactical questions from our network. I'm Colin Anderson, founding partner of Friends and Family Capital and the former CFO of Palantir Technologies. After years in the trenches, we'll explore the scar tissue, frameworks, and insights that help entrepreneurs turn finance into a force multiplier. Let's jump in. Received some great questions this week. Excited to share. These sound totally different, but they're actually the same, and we'll get to that. First question comes in from a friend who's thinking of leaving a company, has 2 job offers, really helping evaluate which one do I take. The second question, it's a founder who's going wall to wall with some sales contracts and expansion, asking how far should I go when I lock in my MSA? Do I want pricing on just the next thing, or do I try to get everything locked in? These sound like totally different spheres, but it's actually the same question. And it's navigating the tension between growth and certainty. Excited to jump in on that with you today. So what does growth versus certainty actually mean? On the growth side, think of this as uncertainty, the chance to push things higher, the chance to harness an opportunity. Now, maybe it works, maybe it doesn't. That's sort of playing offense and seeing how far you can go. On the certainty side, that's just knowledge of where something is. It's the expected value if you want to put some math behind it. And really, you're just looking at an equation and saying, do I want to take the thing that's risky, but maybe a higher outcome? Or do I want to take the thing that's certain, but probably a lower outcome? And it's when do you choose which? How do you think about that? And I want to dig in on those really through the 2 lenses of a job opportunity, but also structuring a sales contract. We all know certainty means knowing what's going to happen. It means understanding the number. It means understanding the future. It makes us feel warm and fuzzy. The reframe on the growth side, if you have certainty, what are you leaving on the table? And that's really what we want to talk about. That's really the risk. To put a math equation behind it, you've got a distribution. Maybe it's a high distribution. Maybe it's a low distribution. You got to take risk if you want to do that. Or on the certainty side, that's just what's the expected value. And maybe you're happy to take something a little lower because it gives you certainty. So let's start with the career side of things. In this example, it was actually a finance professional who was leaving their company and they had 2 job offers on the table and they were trying to evaluate which one to take. Now, if we look at both offers, let's just assume for simplicity that equally big outcomes are possible and similar work environment, similar humans around the table, all good people. I just want to try to control for some variables so that we can really just talk about that growth versus certainty. In this example, actually what differed was the nature and the culture of the role. And in one, you were going to be a level 4 FP&A hire. And in the other one, there was no title. It was just, hey, you're going to come in and you're going to work directly with the CFO and figure out what needs to get done. The working directly with the CFO one, it had a slightly lower salary, but maybe more responsibility. On the FP&A level 4, you knew exactly what your salary would be. And you also knew, hey, if you performed well for the next few years, you'd go to be level 5 and then maybe level 6. On the certainty side, you're like, okay, cool. I can see the progress. If I show up and I do good work, I'll have promotion, I'll have advancement. It sounds great. And if you look at what other people do, you know exactly, okay, I'll get a raise of X each year that I go. Seems great. What are you leaving on the table? Really, what could you be learning? And I would pause, and this is what I told the finance operator. Really think about the responsibility. That's really what you're after. Where are the places where you'll get a chance to work on something new that grows your skill set or really applies and hones your skill set? Is it working on things that someone of your background shouldn't be allowed to do, but they let you, and then maybe it'll just work? Or do you want to sort of stay the tried and true where you know you'll succeed, but it's going to take a whole lot longer to get? This really comes down to, do you want to take risk and a bet on yourself? Now, if you're the type of person where you can't handle that risk or you really thrive on structure, obviously don't go for it. But assuming you can deal with both and you thrive on it and you really want to push yourself, I'd say the earlier in your career that you can put yourself into a position where you can take a bet on yourself and really see how far you can go. In this particular case, I would say, assuming you like the potential outcome of both companies and assuming you like the people with which you would work, gravitate towards the one where maybe there's a little more ambiguity, especially because it means you'll be able to take on things that are outside your swim lane. You'll see more of the business. And when you're building a company, a simple proxy that I've found useful as you go is if you're doing a good job, as the business grows, your level of purview should stay the same, if not get bigger. If you're not doing a good job, that means your level of purview will actually get smaller. And so as a litmus test, think, okay, if I join these companies that are early, if things go well, do I think this is a spot where I'll get to get to see more and more, and that's growing you as a human. Maybe you don't have the certainty, but you do have that growth, and I'd say that's what you should seek. So let's look at the sales side. This one we can put a few more numbers to, so it might be a little easier to follow. Let's say you're a founder. I want to anonymize who it was and what the contract size was, but let's just say for simple round numbers, $1 million deal, you signed it with a customer, it's going great. You've worked there for a while, you like them, they like you, you're providing a ton of value. You expand to a $5 million deal. It's great. Look good on paper. You got certainty. You've been there for a year. Awesome trajectory. Fast forward 3 months after you sign that expansion. Let's say the customer comes to you and says, hey, actually, you're doing great work. I want to go wall to wall. Let's double the contract. We want to go from 5 to 10. It's like, wow, sounds great. You get certainty. You can plug it into your model. Your CFO is going to be happy. Your FP&A team is going to be happy. You can tell your investors, maybe you can raise a new round. You just doubled your numbers. But I would push back and say, what are you leaving on the table? What's the growth that you're trading off for that certainty? So take a step back. Let's say inside this overall company, say it's a huge company, you could provide potentially enough value to justify them paying you $50 million over time. Well, do you really want to lock in 10 now? I think you're leaving 40 on the table. Yes, you go from 1 to 5 to 10 in a very rapid trajectory, but what if your number was actually 1 to 5, wait a little bit, and then it jumps to 50? There's obviously uncertainty there, but there's also growth potential, and that's that fundamental trade-off. So if you think you're in that spot where you're providing tremendous value, maybe it makes sense to actually forego doing the wall-to-wall contract and just focusing on delivering value on the next thing in front of you. If you do want to lock something in or figure out degrees to maneuver on where can you gain certainty, but also keep that growth potential, you can look at a few different factors. Some of those are time. How long do we want to do this? Maybe you just expand for 2 years, but not wall-to-wall forever. So in this particular example, how do you gain certainty, but also balance that with the growth potential? Well, let's find some areas where you could gain certainty. Maybe it's time. Say, hey, I'll do this new deal for 1 or 2 years, and then we'll renegotiate. So maybe keep it a shorter duration, not a longer duration. You could do it on teams. Say, hey, let's do everything you're proposing, but let's roll it out with one team first instead of doing all teams. You could do it on workflows. Teams are busy, especially in large enterprises. Maybe just pick a workflow and expand out on that. Maybe do it on SKUs. You say, hey, with this product, let's go wall to wall. That still leaves you the room to maneuver as you get bigger. But the takeaway is basically give the customer the certainty they want because they want to continue the relationship, but don't lock yourself in because you're probably losing something on the table, especially if the customer comes to you and talks about wanting to expand the relationship. That means they've looked ahead and they know how valuable you are, and it behooves them to pick a lower price. I'd say deal with that uncertainty, really grow, get the value, and when you deliver tremendous value, a good counterparty customer, they're going to pay you commensurate. Put yourself in a position where they will let you deliver that value and you'll both be better off. So that was 2 examples of things that sound totally different. One is career path and trajectory. One is a sales contract and rolling out wall to wall. Sound totally different, but it really comes down to a unique lens, looking at it through growth versus certainty. Now, there's many other lenses that you should look at both of these important decisions through, but I wanted to posit this one just so you have another lens to look at your business. So when you get something, good number, good job, fantastic, celebrate it, but also just maybe look at it of, if I accept this now, if I lock this in now, what am I leaving on the table? And with that, let's get back to building. Thanks for listening to Friends and Family Capital's First Principles Finance. If you enjoyed today's episode, please leave a rating on Apple or Spotify. It helps our founders and finance leaders find the show, and it helps us course correct as we build. We appreciate you listening. See you next time.
A note from our friends in legal. The views expressed here are those of the individual Friends and Family Capital Management, F&FC, personnel quoted, and are not necessarily the views of F&FC or its affiliates. All opinions expressed herein by F&FC personnel or guests are solely their own opinions and may not reflect the opinion of F&FC. Opinions are subject to change without notice. This content is for information purposes only and should not be relied upon as a basis for investment decisions.